over $300 trillion of value, between 10 and $15 trillion transacts on any given year. Real estate is the biggest wealth lever in the world. The fact that there's no liquid exposure vehicle was really shocking.
There is no like McDonald's Discord, no Starbucks Discord, nobody cares. It's very hard to create communities around traditional assets or businesses.
With the launch of Solana, the ecosystem had matured. There was real world utility.
What's up, everyone? Welcome back to the Next Billion podcast. We're back here in the studio. I'm rocking the Samo shirt as well. I don't know if anyone can see that, but we're talking to the entrepreneurs, the builders, the people that are making it happen. And today we're joined by Kellan from Parcl. Now, this is a really interesting product, and we were just talking a little bit about before the call. We'll get into it in a moment, but essentially, we're going to be talking about real estate on the blockchain today and how that's actually DeFi. You know, this seems like it's literally the epitome of things which are not DeFi, like bricks and mortar sitting on a piece of land somewhere, but we can get to that. So look, Kellan, thank you so much for joining the podcast today. It's a pleasure to have you here.
Yeah, likewise. Thanks for having me, George. Excited to be here.
Yeah, absolutely. Look, I think what you guys are doing is super interesting, but maybe we can take a step back first. And what's your crypto journey been thus far? Like, how did you get into this crazy world of digital coins and all this sort of nonsense, but that we love so much and we spend so much brain power on? But what's your journey been like?
My journey, there's two ways to tell the story, but I'm going to start as far back as I can. It was, when I was in college or right around college, reading about Bitcoin, jumping through Reddit threads, watching the launch of Coinbase. But before that, meeting some guy in a park to exchange cash for a link to a Bitcoin. I forget the name of what that.
You did
product.
The New York thing with
no, I was in
Charlie's
Boston.
Thing? Oh, Boston. Okay.
I was in Boston. It was something. It had become a little bit more prevalent. I'm not forgetting the name. I should remember this, but it was like they had like a web interface. It was like Craigslist for buying Bitcoin. So that was, I bought like a couple, which at the time, 20, 30, $40, and then kind of just kept track of it for the next couple of years, but started building a career in traditional finance where I ended up working for a global bank doing equity research, covering semiconductors. And that kind of leads into the next part of my crypto journey. Ended up at a hedge fund. And that's
right.
Yeah, exactly. That's where most recent stop before co-founding Parcl was at a hedge fund running a long short TMT book covering tech hardware and semiconductors. So that second part of the journey where I really got into the weeds and understood, the underlying technology and kind of the premise and promise of crypto and the blockchain was in like the 2017 timeframe during that, 2017-18 bull market. As an equity research analyst covering semis, we had a deep dive to understand what the demand on mining chips would potentially be, and also understand the technology that might make mining on certain chip architectures obsolete, such as GPUs, which we ended up seeing with NVIDIA as things moved to ASICs, application-specific integrated circuits. So, that was the journey. And then, personally investing in 2018-19, got, a little bit deeper in the Ethereum ecosystem. And then around 2020, with the launch of Solana and a couple of the other layer ones, it just seemed like the ecosystem had matured on the infrastructure side to the point where there was, real world utility, maybe not like ready to go, but you could see the path to creating some really interesting things on chain. So, and that's right around when, at least Parcl was conceptualized in the COVID timeframe, late 2020, early 2021. I'll pause there, but we can get into the genesis behind Parcl.
I love that. And certainly this is, you're a guy that's followed a similar pathway, I think, to myself, in that it's about semiconductors, electronics engineering kind of stuff. Really love that. I remember flying to Taiwan like 2014, and I was trading crypto at the time, and then I got on a flight to Shanghai on a Friday and opened a bank account there so I could arbitrage the Chinese exchanges. And I used to, that was a work trip. So I was doing that on the slide.
The original Alameda research trade. What made them who they were was that cross-border arbitrage, selling Bitcoin in Japan for an extra couple $1,000s or something.
Yeah. No, that was crazy times. But no, look, I love that as a genesis. And I think that's a good journey to have been through. And did you see from the early days when you bought Bitcoin from a guy in a park, like, why did you do that? Like, was it a technology that you thought was going to go somewhere? Was it the philosophy behind it? Was it, hey, this is just internet money and we're all going to pay for our coffees with this thing one day? Or what was the thinking behind that?
Yeah, I'll try and take myself back, 10, 12 years ago is a while, but it was like some combination of all of it. It was, reading the white paper with whatever I could understand at that point in my life, having this like early, I studied economics in college. I was, starting my career in finance, understanding what this meant, this decentralized validation effectively and custody of funds anywhere around the world seemed very transformative and really resembled, I thought, what Web 2 did at the turn of the millennium, I guess. And that seemed just super powerful. I didn't know if it was going to become, if it was going to replace currencies, although what little I understood about geopolitics and hyperinflation around the world, it seemed like it was a pretty compelling case for some of these second and third world countries that had, persistent inflation problems. And then, when I really began to learn about Ethereum and like the programmability of money on the blockchain and creating these discrete applications, what effectively became DeFi and is now becoming these, I would call like application layer, smart contracts, such as what we're doing at Parcl. I mean, that, I think the traditional finance ecosystem in the masses is really coming around to what that could mean for everyone, the world in general, and in particular, like the finance sector. So, I mean, the fundamental thesis is coming into shape. I spent a lot of my career before doing this trying to predict these, structural shifts. And at one point I covered Tesla when it was a much smaller company. And you really have to think like, how will the world develop around what's happening here? And I think with crypto, we're totally seeing it. And, I think the next couple of years is going to be like escape velocity for a lot of these applications.
Yeah, absolutely. We started as this store of value thing and people looked at it for payments, but now we're about building a financial system on a blockchain, right? And part of a financial system is, well, how many hundreds of trillions are locked up in real estate or something like that? And there's all sorts of different financial products out there. But take us back. So, you're at the hedge fund and then, COVID time, something like that. And then what happens? You're just like, man, I'm leaving this. I'm getting into something else. Like, what's the idea?
This is like, everyone has a relationship with real estate, George. Like you're sitting somewhere right now. I forgot to ask you if you're in home or wherever, but I'm at an office. And there you go. And I grew up somewhere. I moved somewhere. Like everyone else, I've moved several times. So you begin to like really get ingrained in this real world of where you live. And so everyone has a view, right? And everyone is either overexposed or underexposed. There's very few people in the world that have like an optimal real estate exposure, whatever that means, right? Whoever's definition you want to, let's just call it 50, somewhere between 10 and 20% of your portfolio should be in real estate. If you own your home, it's way more than that. And if you're a renter, it's most likely way less. So this is always going back to similar time frame around my Bitcoin journey and buying it in the park. I was always interested in this asset class. If you look at historical returns, real estate is very, on a risk adjusted basis, it's very consistent. Generally returns mid to high single digits a year. There's obviously years where it's flat or even down a little bit. 2008, it was down a lot, but it's a very consistent asset class. And it's the more you learn about it, you realize that it's where the majority of people in the world build their wealth. It's the biggest wealth lever in the world has ever known. I mean, Europe is almost built on like the real estate value accrual of the past hundreds and hundreds of years. So that was like the foundation. And then in 2020, I'm at this hedge fund and we're trading long and short. Relative value was a big strategy that we used. And I'm covering semiconductors. So it's like long AMD, short Intel, long NVIDIA, short Intel. So and you create these market neutral strategies to extract idiosyncratic returns, or what most people call alpha, and create like a high Sharpe ratio, which is a measure of risk adjusted return, right? Real estate, like I just said, is that asset that drives just naturally a ton of risk adjusted return. Most people who have a mortgage have 5x leverage. What other consumer asset do people have access to 5x leverage on? It's because of that risk return profile that real estate is just more predictable and it's so deeply intertwined with so many people. And anyway, so COVID's taking off. It's 2020. There's asset volatility across almost every asset class, real estate in particular. And it seemed like there were some structural shifts, right? Work from home, work from anywhere seemed to unlock where people could live relative to where they worked and totally change how people thought about that relationship. And that to me and to Trevor, one of my co-founders, seemed like it was going to, create a lot of opportunity, and there needed to be a way to get exposure to it. So we looked around and there just really wasn't. There was no good way to get liquid exposure to real estate, which is, by the way, real estate's the world's largest asset class, residential real estate. Over $300 trillion of value around the world is in that asset class. And over somewhere between 10 and $15 trillion transacts on any given year. And the fact that there's no liquid exposure vehicle was really shocking. You know, if you think about
insane, isn't it? It's locked behind like pieces of paper and, you know, just, it doesn't really move that often, or, you know, it's just very hard to access that liquidity globally as well. Like certainly there's REITs and various like different vehicles on exchanges, but it's like, cool, man, can I buy that at 5 p.m. on a Sunday? Nah, can't. So like...
That's the one thing. The other problem with REITs is that it's kind of its own asset class. And if you look at the returns, if you really backtest them versus the thing that most people are trying to isolate, which is like the market price of real estate in, let's call it the US, or maybe like a sub-region, the Southeast, for example, it doesn't have a lot of correlation, which is actually really frustrating. So if you're getting exposure to real estate through a REIT, you're also exposed to a bunch of other stuff, which you may not want to be. And then you look at, you know, owning a physical property comes with all sorts of headaches, legal, you know, you have to come up with a big down payment. There's this process, 3-month process to close. You have to pay all these costs to the brokers and real estate agents. It's just kind of a nightmare to the degree that many people who do it, it's basically a career or like a second career in and of itself. So for the average person that already has a career, getting exposure to real estate is really hard. And a lot of people have tried to unlock this through fractionalization. And I think some of them are doing a really interesting job. One in particular on Solana, Homebase, they're a great team. They're doing some really cool things. And effectively, fractionalization is divvying up the equity of a real world property such that anyone can invest in it if they meet certain criteria. It's interesting. It's just, to us, it's just hard to scale. And it doesn't solve for the several things that we wanted to: liquidity, breadth of offering, and low transaction costs, and, you know, access to as many people as possible. And that's really what Parcl solves for. We'll get into how it does that. But that, just to wrap up the genesis, you know, we wanted to get long Miami, short New York. That felt like the trade in the pandemic. You know, people can now live anywhere. Why wouldn't they want to live somewhere warm? They can work from there. So that kind of, we expected that would send property prices in Miami soaring. Miami's up, you know, somewhere around 100% since that point in time. New York is up, let's call it 20, 30%. That spread, if you put on a long and short and it's market neutral, you're up 70%. That's unheard of for a pair trade. So that was the idea. We wish that we had created Parcl sooner so that we could have put it on. But that's why we wanted to develop this product.
And that's it, isn't it? Because most people, in conversations that I've had with a lot of friends in the past, right, it's people often look at real estate as like, I want to get on the property ladder, or I want to get it as an investment property. They don't care so much about like 123 George Street or something like that.
Right.
It's not about that. It's a property that exists in this market, and this market has done X return. So actually what I'm buying, it could be anywhere. They don't really care. It's like, look, I'm buying a thing which in general the market says that it might go up 15% this year, and I think that's great, so I'm going to go and buy this thing. But then, of course, you have all of these other costs, right? You have solicitors' fees and lawyers and, something broke and the tenants, you have to have a property management company and all this sort of stuff. So the actual problem people are trying to solve is, I just want exposure to this thing because I think it's going to do well, but they don't really want all of the other sort of nonsense that comes along with it, or at least perhaps many people don't realize that. And I really like what you said as well. A lot of people, they don't realize they're taking massive leverage. They're like, whoa, 20x perps, no thanks. And it's like, okay, didn't you like get a 5% down mortgage as well?
Yeah.
Like, what are you doing?
The same. That's the brilliant thing. If you really think about it, it's the exact same thing. You have somewhere between 5 and 20x leverage on your home. I mean, the typical thing is you put 20% down. So, all right, you have 4 to 5x leverage.
Yeah.
That's what you're doing. And this is considered like the most stable asset that you can have. And a mortgage is not considered like some crazy risky thing. But what you do have is like multiples of leverage on an asset. So yeah, it's really interesting to see that dichotomy.
Absolutely. So, so the thesis is people need exposure to this thing. Now it's about, I guess, creating a way to do that. And instead of going down the path of tokenizing 123 George Street, which I agree, to scale it is a lot harder because, okay, cool, this house is fully booked out. We've raised $500K for it, whatever. Cool. Now we got a whole bunch of other investors who want to go and buy. now we need to go and buy another house. Okay, now we got to go and literally go and sign pieces of paper and so on. So then I guess the genesis is what? It's like, okay, it has to be DeFi. It has to be some sort of financial product that maybe tracks an index or something like that, right? Yeah, sort of walk us through that journey as well. Like there's been a lot of DeFi stuff out already by that stage, or at least coming out, I guess, in COVID times. It was sort of just really kicking off.
Yeah, I mean, that's exactly right. And I think that, people ask us why blockchain. There's several reasons, but the primary one is that to create a product like this, which is effectively an index, a perpetual prediction AMM or perpetual prediction market that tracks an index price that does not have a liquid spot market, that's novel. That code hasn't been cracked yet. And DeFi, through its decentralized custody, its smart contract as a clearinghouse, and its global formation of liquidity, makes it possible in many ways for the first time. But the most important thing as it pertains to this product that needed to be solved for was a real-time pricing layer. So real estate, you mentioned it earlier, there's this conception or perception that it doesn't move in real time, it moves slow. But we just established that there's 10 to 15 trillion dollars of value that changes hands every year. That's a lot of movement, and there's pricing, there's a price on all of those transactions. Ipso facto, it should be updating in real time, and there's no reason not to, especially given the digitization of everything over the past 10, 20 years. There's now all sorts of ways that people transact in real estate online. They search for homes on Zillow or wherever you're at, George, whatever this, the equivalent thing is. There's just like a big wave of digitization. And as a result, the access to real-time pricing has gone up. So, we looked around and looked for kind of a third party that we could plug into that ticked all the boxes and met the criteria of what we thought was necessary to create this real-time real estate marketplace. And we just couldn't find one. So we began to build it out ourselves. And then that it has actually turned into what's now a wholly owned subsidiary called Parcl Labs. And that entity creates these price feeds. It ingests all the data. Every 24 hours, a new price updates. There's hundreds of markets that are covered now, and just under 20 of them are tradable on Parcl. We'll get into that. And that was the biggest hurdle in my mind. DeFi and kind of the innovations that had already begun, unlocked the global formation of liquidity and the low transaction costs and decentralized custody and on-chain clearing. But the data was equally, if not more important. So those were kind of parallel paths towards solving this problem.
Yeah. And, I've said so many times that if people just had more price feeds for more things, you could spin up perps for so much cool stuff. Technically, if you had a robust price feed, you could trade the temperature in Miami every day, as long as you could create a perp market for that if somebody wanted to. But I guess it comes down to the robustness of that data, right? And this is what a lot of oracles talk about, and they go, okay, well, if I'm just the only guy who's telling you the temperature in Miami, that's probably pretty risky because I could manipulate it, I could do all sorts of different things. But if you're taking data points for a particular market from a whole bunch of different places, like, for example, the Zillows of the world, right? And they have thousands of data points, lots of transactions happening there. That's pretty good as a data source. Like, how do you think about data sources and how important they are to being able to provide that robustness for these price feeds and making sure that they are actually accurate? And, if something happens tomorrow and some source disappears, like, it's going to be okay.
Yeah, you kind of got to the heart of, or at least part of that answer in the way you framed the question, which is, these are large markets. There's many, many data sources and many, many data points flowing through every day. There's a power of, the sample size is large enough that it creates this robustness, it creates this representativeness and improves accuracy, especially the way that it's being presented, which is as a median. It's a median price per square foot of every transaction that's occurred within this geographical boundary. And let's call it Miami. That's a very large geographical area. And, that plays out in New York and Chicago and Paris. So that was fundamental. It's like what size of market, especially early on, needs to be offered to create trust, to establish representativeness, and to create a product that, or a data feed that folks will trade around. And that's effectively what's happened. We did a ton of back testing. We incorporated, third parties helping us to make sure that the methodology was sound. Began to publish, you could call it open source, but key elements of the methodology. There's a white paper for the price feeds themselves. There's documentation that folks can find on the Parcl Labs website. And then effectively getting through news media, through awareness campaigning, through kind of partnerships with corporations and letting in institutional investors under the hood and understanding the data. It created this momentum behind the viability of the data and the fact that it was representative and novel in real time. And that's really played out. And ultimately, those were the criteria that we thought had to be met to create a liquid market around these prices. And that's exactly what's happened. So I think that's the fundamental answer to that question.
Yeah. And like, I remember talking to a lot of people many years back about some of these data silos that exist for providing data sources for a lot of the things that happen in TardFi. And it's people like Morningstar and Bloomberg and all these peeps. And they've been doing it for decades. And they're probably not that willing to give it up or invent something new, right? So essentially, like, there is no ideal off-the-shelf solution for this. So it's really cool that you guys went and rolled your own. But so, okay, the product perps for a particular geographic area and market, right? That's what Parcl is. You can go long and short, correct? And maybe when did you guys launch? Like, what's growth been like? And I guess what's the type of user that use it, right? Because I think crypto people and DGens, and this might be playing devil's advocate here, like they're all talking about chicken PFP or something like that, right? And like, are they the type of market for this sort of thing? Or is it more of a play of, this is something that is important to people that are constructing a portfolio or something like that on crypto? Or who's the target market really?
Yeah, it's a great question. And you're right. Parcl is, like I think I said earlier, a perpetual prediction AMM. So, index, and it feeds through an Oracle, which is a custom Pyth implementation. And it references that Parcl price feed, that index price. The kind of user base today, early on, you can think about it, the natural user has been, we would call them speculators, Solana native, crypto native folks, people with assets on Solana, most likely play around in NFTs on Solana and DeFi as well. And that group it's a new product. There's many of them have real world utility. Many of them are just using it as another vehicle to effectively bet or gamble. But that's the beauty of the product, is that it speaks to a lot of different people, and everyone, as we mentioned earlier, has a relationship with real estate. So there's just a lot of transferability to a lot of different people in terms of understanding.
People understand it straight up. Like with a new DeFi protocol, DeFi people love inventing words for different things that are either like the same concept or like some crazy new thing. But it's like, this is, a way to bet on property markets in a decentralized way. Awesome. Cool. Everyone understands that. It's like, can I go like 5x long Miami? Okay. You can understand that, right? It's not some crazy like DeFi protocol that needs 3 hours to explain.
Yeah, exactly. And there's all sorts of examples of like long threads on Twitter that have kind of gone pseudo viral. And it's just people arguing which city they thought would go up and down, and then having no way to consummate that bet except like some sort of like bespoke wager against, with some guy in their DMs, guy or gal. So, that solves that. There's one key utility right there. All right, we've now solved it for the Twitter thread people. But there's several more classes of users, and to the point, like the genesis of the question, we're now seeing those users come into the product and really search out to find, either they've become aware of the product themselves or they've done outbound research and it led them here. And those, I group them into 4 groups of users. We already touched on speculators. They'll always be around. Then you have investors, and you can think of it, investors obviously most likely tilt long. I would think of it like renters all over the world. Anyone that may one day want to buy a home, there's utility for this product for them, right? They can get exposure to the one thing that they really want to isolate for most people, which is market price, right? As a renter, this is actually a hedge for you. So you're hedging the market you live in and your rent going up if you're long. So that's a very natural group. And that, a lot of it speaks to both individuals and institutions or sophisticated investors. There's just a need for liquidity on both sides of this trade at the level of geography and specificity that Parcl offers. So those are the first 2, speculators, investors. Then I talk about hedgers. There's a very interesting use case for hedging here. Like we said, $300+ trillion of net asset value around the world in residential real estate, but that's all long. There's really no good way to protect that, outside of insurance or some sort of exotic swap on mortgages, et cetera. And this is it. It's very simplistic. I can get short, lock in my paper gains, especially if I own a home. If I own my own home, I don't want to sell. I got a sweet mortgage rate, but I would like to find a way to protect these paper gains that Zillow or Redfin or whoever is telling me that I have. Here's one way to do it without touching my loan structure, without downsizing and relocating and losing my mortgage rate. So that's super compelling. And then institutions have a very interesting use case around hedging across all sorts of different, use cases. Home builders, holders of residential real estate, holders of multifamily rentals, iBuyers or flippers, the list goes on. There's all sorts of utility for those type of users. So if you think about it, we're now creating this very robust, efficient marketplace where people have all sorts of different reasons for participating, both with desired returns, but also as a risk mitigation tool and as a hedge. And that creates a very efficient, balanced market, which is exactly what this product wants to have at scale. And then the last group is like arbitrageurs. They show up whenever, in TradFi, it's hedge funds and quants. In, crypto, it's MEV, people who run MEV bots and people that are doing, cross-border arbitrage like what you did back in the day, George. So, that's kind of like the end state. If you've gotten there, then you're really efficient. It's going to be a very efficient market. There'll be plenty of liquidity. And that's the path, So today it's a lot of speculators, but starting to see some investors, starting to see a little bit of interest from hedgers. And then there's a lot of money behind those two use cases. And then you end with the arbitrage folks.
I love this concept as a way to express an opinion on something which everyone implicitly probably has an opinion on. There will be some people that will be like, hey, I think the S&P is going to outperform real estate and, that's what I'm going to bet on. It's like, cool, man, you can have that bet. If you think that it's going to do that, then you can go and, short real estate versus long S&P or something along those lines, right? So it allows you that even if you have a preference like, crypto is going to do X or Y, or it's a bear market and crypto is going to go down and real estate's going to outperform. And it's like, cool, now you have the tools in front of you of which you can express that opinion, right? Doesn't matter if it's long or short, whatever it is. It's before you just literally didn't have the tools. So yeah, look, I love that being a way to express an opinion on relative to anything, because everyone sort of understands and gets real estate. So I believe July was a good month for you guys, right? I'm looking at the product now, and yeah, maybe we can talk about some of the really cool things going on. It's changed since I checked it out last as well.
Yeah, absolutely. So you're exactly right. July's been a really strong month. We're a little bit more than, I guess, 2/3 of the way through July. Open interest in July almost 3x versus the same kind of time frame in June. There's a lot of activity. Yeah, it's been awesome to watch. And there's a lot of, new users and folks that have discovered the product and are poking around and learning about it and deploying capital, which is really awesome to see. The current architecture is it launched in late January, early February. And before that, the original one was kind of a CDP model where folks would over collateralize a debt position that minted them a token of the underlying, price feed that represented that real world market. And then they would pool it into an AMM. There was just a lot of inefficiencies there. It underutilized capital. This new model solves for many of those. It makes it way easier to get short, right? In that old model, there was just a lot of complications. There was no natural hedge. It was just more challenging. Here, it's just, I want to get long, I want to get short. And by doing that, you are taking a position in the pool. Everyone in the pool is a liquidity provider. So, and it allows for skew long and short, but maintains this peg to the real world price, which is the index price. That was super important. So there's all sorts of enhancements that it really improves the user experience. The development team and the engineering folks within it are now working on some key enhancements to the current model that we think will just unlock things and take it way to the next level and make things more efficient, allow for larger ticket sizes to be put on more easily, some changes to architecture on liquidity provision, and it's just all good stuff. So keep an eye out for that over the next couple of weeks and months. But July was a great month. Plenty of new users. Activity in dollar terms or USDC terms is through the roof. Quick side note, USDC is the primary and only collateral that's enabled on the protocol right now. So yeah, come check it out and bring some liquidity and poke around and express your view on real estate markets.
Absolutely. And one of the changes that I saw was international markets as well as a whole bunch of cities. Man, I should have just shorted San Francisco as soon as I saw all the zombie videos on Twitter. But Yeah, look, France now, right? Paris and France. So is this going to be a recurring theme? Like more cities from around the world that are real estate hubs, you could say as well. Is that a focus for you guys?
Yeah, I mean, if you think about it, like what was the primary gate? We talked about earlier, the data, and that nut's been cracked in large part. You still have to collect new data from a new market if you want to roll out those price feeds, but the underlying architecture and the fundamental elements of it are well established. So it speeds up the time to market, the time to a new price feed. And to your point, Paris just launched Ile-de-France, which is outside of Paris. You can expect to see more markets like that, world-class tier one cities around the world. Think London in the UK, think, Sydney, Australia, think Hong Kong, Singapore, Toronto, and Canada. One that I would love to see is Mexico City. I'm super bullish on Mexico. But, that's the game plan from here. There's 17 markets in North America, in the US, that have been live for several months. Those will keep rolling out over the coming months. I think the near-term goal is to get to like 30, 32, which is what we call the NFL or NBA cities. Those
nice.
Definitely nationally recognizable cities, but also like globally recognizable in large part thanks to the NBA. And then just building liquidity, building users, bringing more people in to discover the product.
Right. And one of the ways, like when I first logged on, I think I had to click through like a contest or something like that. And it seems like, this has certainly been a way that, people want to get involved and sort of build a community, because I guess here's one thing is there is no like McDonald's Discord. There is no Starbucks Discord. Nobody cares, right? There is no, like, I guess you could say a Bloomberg terminal is the Bloomberg Discord, but it's very hard to create communities around like traditional kind of assets or businesses around something like that, right? So I guess real estate being one of them, it's like, who's in the Remax Discord? Is anyone in there? Probably not, right? So I guess what you guys are trying to do is you've got this traditional asset class, but you're sort of merging it with crypto and, making it more accessible to people. And that's where like having an actual community, having contests, having fun things, it's very accessible. You just click some buttons and connect your wallet and then boom, you're in. But maybe talk about the sort of customer acquisition for you guys. Like how are you going about that at the moment?
Yeah, it's interesting. Bloomberg, that's a great comparison. Bloomberg chat is basically Discord. I think that the user experience, the Discord they get roasted for their user experience, but it's night and day compared to Bloomberg chat, although the simplicity kind of makes it endearing. Anyway, user acquisition, it's really the product first and foremost. It's novel. There's real world utility, and it speaks to all sorts of different people. That real world utility could mean one thing for a renter, it could mean another thing for a homeowner. And so, making people aware that there is an option to get liquidity in this market and get it in real time. And that's really just chopping wood, grassroots. We're doing podcasts, we're doing AMAs, people can pop into the Parcl Discord whenever they want. There's all sorts of content getting funneled through there. Parcel's Twitter account, both Parcl and Parcl Labs. I would definitely follow those. If anything in this podcast speaks to you, just click that follow button on Twitter, because there'll be something that you'll enjoy content wise. And then partnerships. You mentioned the contest. There's it was monthly, now it's bi-weekly. The best traders can earn their share of bi-weekly prizes, both USDC, and we throw in some NFTs sometimes. And that's a great way to learn, to get your feet wet, to discover the product and check it out, is to join the contest. And then it's grassroots awareness campaigning, letting people know that this is a thing. I put a thread out a week or two ago, and some of the folks that drive the largest volume on the protocol, we think came from seeing those threads and just understanding that this is a product that exists and is something that's cool that they have a utility for. So just more of that, and it takes time, but you're seeing the results in July month to date. And the beauty here is that truly the sky is the limit. It's the world's largest asset class. It's the least liquid. And there's now this product that changes that. So definitely check it out if you're interested.
Yeah, and there's not that many products that we talk about RWA, right? Real world assets. It's kind of been a little bit of a buzzword in crypto land during the bear market. But it's like, this might be something that brings about the next cycle, or is one of the key features of it. And I think this is really, quite as you say, a novel product. But what do you see? How does this fit into the rest of DeFi, right? Like, it's mid through 2023 now. it seems like we're getting a bit of a revival after SBS blew everything up and Solana took a hit. But and this is across not just Solana, but across all of DeFi, right? Crypto has had a rough time. But having said that, it seems like we're seeing some green shoots of late in the last few weeks / month. But what's your take, and what's ahead for DeFi?
I'm super optimistic. Solana as a network, but certainly the DeFi ecosystem's been through the ringer. You mentioned FTX, like goes without saying. It's been, that just kind of blew a hole in the side of the ship. But really encouraging the folks in the ecosystem that stuck it out, kept building. Hopefully we're considered one of them. And, we're starting to see some green shoots. What's on the near horizon? I think that there's a symbiotic relationship between the infrastructure layer and this kind of emerging application layer, where there's the ability to kind of pool liquidity, liquid staking. Anatoly talks about it all the time, and Raj, that's a huge, important thing for the ecosystem to utilize, because it unlocks capital to try out these other applications and still have exposure to the underlying, network token and perform a service for the network through validation. I think that applications like Parcl are necessary to, bring on new capital into the ecosystem through products that have real world utility for people, real world assets. It's in the name, whether that's credit, whether that's loans, whether that's, tokenizing art and wine, or in the case of Parcl, creating a liquid market for exposure to real estate prices. That will bring in the next 100 million to 1 billion users. Like, that's what we need to have, these applications that speak to people, that solve real problems for them, that give them something that they can't get elsewhere. And by doing that, it will create this flywheel for the broader DeFi ecosystem and the network itself that will aggregate value and, make it something really special and powerful. And that's what, Parcl is, maybe not directly, but tangentially trying to do, is to bring people into this ecosystem through a novel product that we think that they will have utility for, the same way that we would have if it existed 3 years ago, and bring them on chain. And that's really, what we all need as an ecosystem.
That's it. I think, this is actually very normie friendly, because normies, if you tell them about people buying and selling monkey JPEGs for $1 million, they'll be like, that's the dumbest thing I ever heard. This crypto thing's a scam, whatever. But it's like, no, actually, like, real estate is something which people understand. So, hey, this is an easier way to get access to this sort of pricing. Hey, you care about the price of property in Miami, right? Cool. Well, here is something that you can go and use tomorrow that literally just works for that, right? So actually, I think things like this, and maybe that's the real world asset sort of use case, is being digestible to a very large audience that perhaps, may not have done anything in crypto before, or doesn't quite sort of get all of the intricacies and that sort of thing. So yeah, very interested to see, how that develops. I guess from your perspective at Parcl, 2023, anything coming from you guys? Is it just launching new markets? I remember you spoke about some of the engineering stuff that you've got underway. Anything in the pipeline?
Yeah, it's new markets and product enhancements, architectural enhancements that will unlock liquidity, make things more efficient, close the spreads between bid and ask, and balance markets. And that's great for everyone. That improves the user experience. Yeah, super excited about rolling out new markets. I think the more markets that are on the platform and around the world, the better the chance that it will pique the interest of people all over the world. Just because, now, if I'm living in France, there's this thing where I can now trade the price of Paris's real estate market. That's pretty cool. Play that out in London, play that out in Sydney, play that out in Hong Kong. And you can see how that it will naturally build momentum for new users. And that would, naturally mean more capital coming on chain, coming into Solana's ecosystem. So that's super exciting.
I think so, yeah. I mean, I lived in Hong Kong for 6 years, and all people do there is like talk about property, real estate. Actually, I came from Prison Island down under as well, and they also do that down there as well. That's all they talk about is Sydney and Melbourne real estate. So I think this is definitely something really cool to watch, and a good onboarding mechanism for everyone. So look, we're coming up to time here, but where can people find out more? Blogs, websites, social media, where should people go? We'll put links in the descriptions below as well, but definitely, where should we be heading to? Where should we FOMO in?
Yeah, absolutely. I mentioned earlier the Twitter accounts. It's a great place to start. There's just great content that will keep you in the loop and, flag new product, new updates like new markets and liquidity coming onto the platform. To go direct, just go to app.parcl.co, app.parcl.co, Parcl without an E. Also go to the Discord, discord.gg/PARCL. and join the conversation. And George will post some links and people can click through.
We absolutely will. Well, look, thank you so much for your time today, Kellan. It's been a pleasure. Everyone go and check out Parcl. Parcel's awesome. Really love what they're doing. I've seen, I think when you guys first launched as well, I was checking it out, and I sort of check in every so often, and there's constant updates as well. But a very novel product, and very excited to talk about it. So look, thank you so much for coming on the podcast today, and we'll be in touch very soon.
Awesome. Thanks a lot for having me, George. Great questions.
See ya.